All right, everyone, welcome back for the episode of Carnivore Trades. Today is Friday, September 22nd, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, so let's get into it here today. So what a long week and what a sell-off. So today, markets gapping up higher. What do we know about gap ups in a downtrend? It's not the bottom, and we rallied up and then rolled over. This morning, game plan given out to my members in Discord, and was pretty much spot on. So again, if you're not thinking about joining, come join. 2-week free trial. But again, for bears, they should be sitting somewhere between 43.50, 43.60. Called for an early rally, stalls out and turns into a late day fade. Again, you don't need a bloodbath sell, just assert bear control going into the weekend by closing back below the August lows. And that is essentially what happened. We also had some lotto puts play out. Myself making 200%, a couple other members made 400% on those lottos today. But again, a gap up, little rally, and then kind of a fade. So again, markets generally don't reverse trend on a Friday, and we generally, you're not going to see bottom on a gap down, and you're not going to see a bottom, or excuse me, on a gap up, and you're not going to see a bottom with the VIX gapping down either. So I don't think the floor is in yet. In fact, you look at the VIX here, this has got room to run. That's just an inside hammer. So we haven't even seen fear yet. Now, does this mean we're going to crash Monday? No. That does not mean that. But we do have, and what have I been harping on for the last week? You got to close below this if you're a bear. We've done that. You got to close below this if you're a bear. We've done that, and the 20-week moving average as well. So bears have done damage, confirming that weekly downtrend there. And I believe this can go significantly lower. But in the near term, I'd be looking at about 42.70. So that's a level that I have worked out already. Kind of coincides with this trend line here. Now the trend line on the SPX is a little bit different than the SPY because of that dividend. It's not that far away though, not that much different. 425, 427 SPY. If you're following the futures, you know where it's going, right? This is not a secret. 4,300, right? That's where it wants to go. I think that is at least a short-term buy the dip level. But it's interesting though, right? So something happened recently where, a lot of people were calling for downside. And then, you can probably figure out what I'm talking about, but a lot of people started calling for a melt up into January. And I guess that didn't work this time. And maybe that's the reason why we sold. The BOJ last night, I have a thought that may be a red herring. I know that's going to be the excuse, but I can't even find it here. There it is. That was the BOJ reaction. And you can see it basically didn't matter. I think commercial real estate is potentially something that could be in play. And I talked about this yesterday. I'm just going to pull up Twitter here. Sorry, that's a little skewed there, but you can see commercial real estate starting to break down. And I talked about this yesterday. VNQ, REITs, right? Hammering into this trend line on volume. Came down on volume again today. That should have bounced there. Like third hit of a trend line, that should hold. But we came down on such heavy volume, not a good look. I will say bonds did hold up. JNK was green today, but let's not make a whole lot out of that. It's not a great day. That still has room to go down. So that's something to keep an eye on. TLT did get a bid. If it is risk off, TLT may turn around. We'll see. That's possible. But if we look at the yield chart, no real problems, just overbought. There's a 10-year as well. But in any case, spiders here or SPX, I think we'll have a little bit more downside, but we should get a bounce early next week. That's what I've got penciled in. Now the triple Qs did manage to scratch out a 5-cent gain. Still closed below that 100 moving average and this trend line. So we lost that on a weekly close. We did close above the August lows, but you do have a failed weekly inside bar. Additionally, this is the big one, SMH. That lost those August low. I do not like that. That is a major sign of weakness. I'm calling it now. I've been calling it for a long time, saying it's going to happen, but now I'm saying it is going to happen soon. SMH is going here. So mark that down, 129. That gap will get filled. Probably even overshoot, probably to 125. But that will happen, I think, in the next few months. SMH is now a broken chart. That is a big negative for technology. IWM, right? Head and shoulder triggered, 165 target. There is a lot of support here. It's not going to go down in a straight line. You got a lot of support at that gap, but this is a clean breakdown. So weakness there in the IWM. Dow closing below the August lows. So that's 3 out of the 4 major indices closing below that August low. Dow's got to hold this 200 MA, 337 area. There is good daily support there. More support down at 331.50. SMH we already talked about. I don't like what that did today. It was green, but I don't like what it did on the weekly. Not a good sign. IGV still has a lot of support here, daily chart. But probably does need to go down and test that trend line here. It does look like it just lost that 20-week moving average. And we got to go back to take a look. We got to go back to January. The last time we closed below that. A little possible M top there as well. But short term, there is support here. So IGV can get a bounce. Transports, not very strong. Again, been saying 14.8. We'll say 14.750. That's the 200 moving average. There is daily support there. Bigger level, it's down to 14,000. But again, we'll talk about it if and when we get there. All right, let's get over here to interest rates. So again, 2-year backing off a little bit here. Still in an uptrend. No problems here. No sell signal. 5-year pulling back. Again, no sell signal. 10-year pulling back. Again, no sell signal. 30-year pulling back. Again, no sell signal here. So I know a lot of people are calling for rates to go down. I'm not seeing that yet. If I get a sell signal, I'll let you know. But this is fine for right now. If you get back below, this breakout area, well, then maybe we can talk about it. But right now, rates are doing just fine, and obviously the market does not like that. Like I said this yesterday, or was it Wednesday? I don't know. It's been a long week. It seems like the market was really expecting the Fed to basically say they're done hiking, and the Fed did the opposite. So that's why rates matter now. It's about expectations, right? Rates didn't matter all year long. Because the market was under the impression. Remember, the market thought that the Fed, back in March and May, the market was pricing in a Fed cut in September. So that just shows you how far we've gone here. But in any case, rates, they matter right now. XHB managed to scratch out a gain, but again, you can make a case it's not the best left shoulder, but it's triggered, head and shoulder there. That could take you back down to 70. There will be support here at this purple trend line. But 70 to 72, there's a lot of support there on the XHB. VNQ, we already talked about. This is in trouble. Monthly bearish inside bar, and it's starting to play out to the downside. You've consolidated enough. So watch out for VNQ here. Could be in trouble. KBWB banks breaking down. Lower lows. XLF breaking down. KRE, wish I held my puts, but wanted to close it before the Fed. Makes sense. Breaking down as well. That will have support in the 40 to 41 handle. KBE will have some support. We'll say 35, 36. It may overshoot 36 a little bit, but there is some support here. But again, not a strong pattern. Broker dealer is lower as well. That's a breakdown. That's going to go to 480. So watch for the XBD at that level there, maybe even 475. Crude here continuing to hold up. It does look a little tired. I can't rule out one more little pump though. If this 20 MA catches up, I could see it again getting into that 93 to 95 area. That's all the upside I have for it right now though. But crude holding up 73 cents, and again, that's putting pressure on the market. Little theory here, maybe crude pulls back in early next week. That could give the market a lift. Or if it blows off into 94, 95, the market gaps down and then reverses. Could be something to watch. But the market is highly attuned to energy right now. XLE getting a micro bounce here. We'll watch that for pattern, not touching that right now. XOP finally slicing through that 50 MA. That was just overbought, right? I mean, come on. I kept waiting for a pullback in this, and it just wouldn't come. But we'll see. 138 right now on the weekly. That should be some support there. We'll look for that. OIH bouncing as well. That still remains strong. That does not want to get out of the way. CCJ remaining strong as well, up another 3%. I still think that wants to go test 37.50, and URNM, a new nominal high. Wow, very top heavy though. Nat gas getting a little bit of a bounce today. That pattern has not changed. We'll continue to watch that going into next week. Pattern looks good on the weekly. Dollar index, it's holding up, right? So, and again, it's very much inverse to the market, as you know, but look at intraday. We started to pull back, or dollar rallied, market was selling off. We pulled back, the market rallied, dollar rallied back up, market sold back off. It's still going to 106, 106.50. So watch the dollar there. Gold here hanging in there. So decent day, still watching this wedge. You guys know my thoughts. I'm still looking for 1900. Silver hanging in there, stalling out at 24. I don't really have a good level on this right now, but it is getting a bid. It's hanging in there as well. So again, we'll continue to watch that. Platinum, a little bit of a pop, nothing more than that. Palladium, still nothing burger. And then copper getting defended at that little wedge trend line. If this consolidates, so it can go through that. And again, I'm still looking for 340. Bitcoin here, relatively quiet considering the rest of the market here, but again, still 50 MA rejection until proven otherwise. Big picture, the weekly pattern is still bearish. So just be aware of that. Could be setting up a bear base for a decline to 21.5. Again, lastly, a couple of points to take away, Weekly close below August lows. That is not a good sign. Weekly inside bar failure, also not a good sign. So next week, we'll probably look for some type of a bounce, but we do have a breakdown. So give the bears the benefit of the doubt. We've been giving the bulls the benefit of the doubt this whole time, really since June. Got to give the bears the benefit of the doubt. Why? You have lower highs, lower lows, and you've proven it on a weekly close. And the bulls had every chance, right? They had every chance the last couple of days to save this. You had the FOMC, you could have rallied it up there. You could have had the bear trap right there. And the bottom fell out. Yesterday, you just gap and go. It was a trend day down. Today, you had a chance to squeeze. Look at the Qs intraday. I barely talked about this, but look at the Qs intraday. There's your squeeze chance, and you couldn't do that. The semis got really close. Put in a bull flag, and it failed. So again, give the bears the upside bias. This is a broken chart on the semis. You guys know how my thoughts on that. This is going to 129. Doesn't mean it'll be in a straight line. I think we'll get a bounce Monday or Tuesday next week. But I would say 42.70 right now is kind of the preliminary level that I'm looking at on the SPX. Anyways, guys, for more analysis like this, come find me at carnivoretrades.com. Subscribe to the channel. You guys take care. I'll talk to you all next week.